Good morning. Today is April 24th, Friday. It's Aloha Friday. We made it through another week, and this is going to be my market update, market statistics update for residential real estate in Thurston County. And before I get to my updates, um, I really like statistics. It gives us an indication of what's happened in the past. And from that, we can either forecast or we can form our own opinion on what we think is going to happen in the future. But as we all know, statistics can be presented in a way that maybe skews our ability to forecast or to form our own opinion, or if the person that's presenting it has an agenda, they can present the statistics in a way that will help support that agenda. And so when I gave this update a few days ago, maybe on Monday or so, I mentioned that the pending sales was one of the bigger indicators of what's happening in the current market, and I don't think that I fully gave the entire story of what's happening in the real estate market. Now, pendings is one of them, one of the things that is an important indicator, and also days of inventory is also an important indicator, but I didn't really clarify how it all works. And so before I get into my stats, I want to talk about a little bit about how they all work together, and that way the statistics will be more usable for you. So I'm going to go ahead and share my screen. And so the thing that I want to talk about today is really about supply and demand. So our real estate market, at the heart of it, there's a lot of things that's affecting it, but at the heart of it, it's a supply and a demand issue. And now I know a lot of folks, you know what supply and demand is. But I just kind of want to go over it and how it applies to the stats that I'm presenting. So, of course, here when you have a lot of supply, so I think about supply as, say you have 500 units of supply or 500 pounds of supply. So when you put 500 pounds of supply in and your demand is not as much, so say you only have 100 pounds of demand. Now demand is going to be low. And this balance, the scale is going to be skewed. So you're going to have lots of supply, no demand, or less demand, which means that prices are going to be less because you have a lot of things for people to buy. People don't want to buy as much of them, so that means that prices is typically going to go down. Now, on the reverse is that if you have a lot of demand, so say you have 500 pounds or 500 units of demand, you put it on this scale. Now your supply is only at 100 units or 100 pounds. Now the scale is going to tip, and that means that demand or supply prices are going to be high again because you have a lot of people wanting to buy something. There's not as much of that something to buy, in this case houses. There's not as many homes to buy, which means that the price is going to go up. So when I talk about pending sales, that is the demand. Pending sales I think is a big indicator of what buyers are doing right now. Buyers are out there, they're looking at homes, they're putting in offers, and that is the pending sales is a result of that. So that's the demand side of it. So when I talked about that being a good indicator, it was only talking about one side of this balance. Now, when I talk about the inventory levels and days of inventory, now that's a comparison because that's comparing the supply divided by the demand, and that comes up with so it gives you kind of a relationship between the two, and that's really what's important, is this relationship again, because if you have if you have supply, if you have 500 pounds of supply but 100 pounds of demand, then again, prices are going to be low, but it's that relationship between each other. Now, on that same token, if you have 500 pounds of supply and you have 500 pounds of demand, now your price is going to be steady. It's going to be balanced. And again, it's that relationship. And again, another example is that if you have 500 pounds of supply, so the same 500 pounds of supply, but now you have 1,000 pounds of demand. Now, again, demand is going to go, demand is going to be heavy, and your price is going to be high. So again, so it's all this relationship between that. It's the relationship between each other. It's not just one side of the story. It's the relationship that's going to drive prices. Now, price or the two different sides is influenced by a lot of things. So demand can be influenced by by in the housing market, it can be impacted by interest rates. If interest rates go down, demand will probably go up. If interest rates go up, there's a possibility that demand will go down. If people are afraid that they're going to lose their job, of course, demand will probably go down. If the economy is booming and everybody is happy and making money, then demand will probably go up. So there's a lot of things that can affect demand. And on the same side, supply can get affected as well. So now supply, it's going to be heavily affected by demand. When demand is high, capitalism just says that the market will try to meet that demand by either building more houses or creating more, whatever it is that the public is demanding. So demand will definitely affect supply. But also, like in the housing market now, there's a high demand, but also the regulations that the county has put on with curbing development, that is going to, even though there's a high demand, that's going to affect supply. We're not going to be able to build as many homes as we could. Also, the like the gophers and having all this land that's affected by gophers, that's going to affect the supply that builders can put into the market. And also, when you have people that are selling their homes, they're providing supply as well. But if they don't have anything to buy, they're not going to put their homes out there. And so there's a lot of different things that affect the supply and demand side of it. But again, at the heart of it, it's this relationship between supply and demand that affects prices for the most part. So I just wanted to clear that up because last time I was just talking about the demand, and I think it's important to talk about both sides of it. So now when we look at now we're going to look at supply. So when we look at our active listings, so here's our active listings. You can see blue is our active listings for 2019, and the orange is the active listings for 2020. So you can see here we're trending up for the year as far as active listings. We started the year at 241. At the end of January, it was at 241, and now we're at 428. And in 2019, this was our active listings at the end of each month. So you can see it was fairly high, and now we're just trending up to get to that. Okay, so that's again that's one indicator. So now that means that our supply is going up. So that side of the equation, our supply is going up and it's trending upwards. Now when we look at our canceled listings, so now canceled listings are listings that for some reason it was on the market and the sellers took it off the market for whatever reason. And so now again, that's going to affect supply. That's going to reduce the amount of inventory that's out there. And so I wanted to take a look at this because this is March and April of 2019, and this is 2020. And so I wanted to take a look at this because I was interested to see what happened after we had this stay home, stay safe order, or about the time that COVID kind of came to our, that we started to talk about COVID. It was about that February timeframe, and the stay-at-home order came at the end of March. And so I wanted to see what happened if sellers were going to be skeptical and wanted to pull their houses off the market. But you can see here, they're not. We're really on track for March. April, I'm not sure what happened last year in April, but there was a little bit of homes that got pulled off the market. But now, we're only at 13 for April. And again, that's only through the 23rd of April. So at the end of the month, we might be at maybe 16, 17 homes that have been canceled. So again, pretty even. So it indicates to me that nothing really, sellers haven't been, afraid to pull their house, or they haven't been afraid and pulling their homes off the market. They're just, kind of doing things as they were, back even last in March, less than what they were doing last year, and then kind of the same thing for the entire year. So again, this indicates to me that sellers are kind of doing business as usual. And then going back to actives, this is saying that sellers, they're not really afraid. They're actually putting more supply into the market. So that's the supply side of what's happening here, which I didn't talk about last time. Okay, so now when we look at pending, so pendings are going to be the demand side. And again, I think this is a really good indicator of what the buyers are doing right now. So we can see here that this blue line is pendings by day for the month of April. Okay, and you can see here that, and so this orange line, this is what the pendings per day was back in April of last year. So we had about 15 pendings per day. Okay, this year in April, we're only at 10 pendings per day. Okay, so that tells me that, yeah, the activity for buyers has backed off compared to last year. But here, when you look at what happened here in the beginning of the month, in up to about yeah, maybe about the 16th, so the first half of the month, you can see that the pendings were pretty low, you know, kind of going up and down, but they were pretty low. And so this was, I think that was a result of this stay-at-home order that was issued on the 25th, on March 25th. So, you know, a home that went pending on 4/16, buyers were probably looking at that the week prior. So again, you know, not as many people were looking at it the week prior. Again, you know, on 4/8, from 4/1 to 4/8, that's probably when these homes went pending. And again, probably not much activity because again, the stay-at-home order was fairly new. You know, people didn't know what was going to happen, what the stay-at-home order was going to look like. So I think these first couple weeks is an indicator that buyers were probably a little bit skeptical about what was happening and wanted to kind of see what was going on. But when we see here from 4/16, now we can see that it's starting to trend up. So for the last 7 days, you know, the pendings have really jumped up, which tells me that again, buyers they're back out there. You know, the real estate industry has kind of figured out how we're going to do things remotely, how we're going to have Zoom meetings, how we're going to do virtual showings. So now we're starting to get into a groove of how we can still conduct business during this stay-at-home order. And I think that's what we're seeing now. Is now we're starting to see the trend. So overall, when we look at the month of April, the average at 10 is pretty low. But again, I think once we get to the end of the month, we're probably going to be higher. I don't think we're going to get to our 15 just because there's not enough days left in the month. But I think we're going to be probably, you know, maybe 11 and 12 for the day or for the month average. And if this continues through March, or I'm sorry, through May, then we'll be able to see what is actually happened. And so that's what I'm going to be interested in, is to see what this trend, if this trend continues into May and into June, and same with this, is how will this trend continue to trend up, and these cancels, will this basically stay the same? And so that's the kind of things that when we look at statistics, we can see what happened in the past and be able to maybe forecast or form our own opinion of what we think is going to happen in the future. Now, when we look at inventory, so now inventory, this is what I talked about, this is kind of the relationship that we have between supply and demand, because inventory, how we find our inventory. So here in April, this year, we have 43 days of inventory left. And so the way that I come up with that is I take our active listings, our current active listings, and we can divide that by the days of inventory. And I'm sorry, so we can divide that by the average inventory per day. Okay, so we have, or I'm sorry, the average pending per day. So we have about 10 pendings per day. We have 428 listings. When we divide 428 by 10, that gives us about 43. And so that's how we come up with our days. So you can see it's that relationship between pendings per day and active listings that gives us our inventory. And so that's kind of the relationship that I didn't really explain on my last video, but that is the relationship. And so now when we see this trending, so we can see that it is trending. And now the reason why it's going up is because active listings are going up from 241, 318 to 428. So active listings are going up, and pendings have gone down. On average, it's only 10 versus 15. So the two of those put together means that our days of inventory is going up. And when we compare that to April of last year, April we're at about 25 days of inventory. 25 days of inventory compared to our 43 days of inventory. And so now, again, we can kind of see that relationship of what's happening. So now, again, this is another one that I'm going to be watching over the next several months to see how high that goes. And even though this looks great, which means that as days of inventory goes up, that balance between supply and demand is somewhat leveling out. At first, there was so much demand and not enough supply, and now it's slightly leveling out. But again, what we like to call a balanced market is that if there's anywhere from 120 to 180 days of inventory. So even though we are kind of trending up, I think it's going to be a long time until that relationship between supply and demand get to a point that it's level. So now, again, the demand is going to be affected. I mean, if a lot of people end up losing their jobs and they can't get a job once we get back to normal activity, then of course demand is going to get affected, and that number is going to be affected. But we're gonna, I'm gonna watch it and again look at what's happening and try to maybe forecast what's going on in the future. So I hope this clarifies what's going on and clarify how I'm interpreting this market stats. Hopefully I'm able to, kind of show both sides of the supply equation so that now you can take a look at these at the statistics and come up and form your own opinion. If you have any questions, please post it in the comments or wherever, and I'll try to get to them as soon as I can. Well, thank you all. Hope everybody is having a good, safe Friday. Have a great weekend, and we'll talk to you soon.